This is Danny Gould with the Gould team selling Silicon Valley. Welcome to another Silicon Valley market snapshot for the last week in April, my goodness, wrong A, August of 2019. And folks, more bad news for you if you're a Silicon Valley homeowner. Silicon Valley real estate market crashes following astronomical rise. This brought to you by the HomeBuyingInstitute.com, your foremost experts on real estate, clearly. Let's look at the article though, because it's actually, I don't mean to poke fun, but again, this would technically constitute as fake news. The Silicon Valley real estate market, appears to be crashing in 2019. Okay, so hold on a second, hold on. So it's definitely crashing. It's already crashed. It says Silicon Valley real estate market crashes, past tense, like it's already happened. False. Then highlights, like the meat and potatoes of the article says, the Silicon Valley real estate market appears to be crashing, as in it will be happening in the future or is currently happening. So their grammar is very confusing. Home prices are currently falling all across Santa Clara County. Again, false, but okay. This is partly the result of rapid, unsustainable gains in recent years. Okay, interesting. Well, let's talk about this, folks, because I'm really fascinated by the fear-mongering media. I mean, they've really done a good job of instilling fear into the consumer. Me, myself, having been in real estate for quite a long time, it seems like forever. It feels like forever, and kind of going through these cycles. This is not the first time. This is not the first time where people have become skittish as a result of market conditions, actual market conditions, or market conditions that have been artificially created by the media. And so I want to take the next couple minutes here. And by the way, if you've watched these videos for any given period of time, some of this information might not be news to you, or might not be new to you, because I've said a lot of what I'm about to say in previous videos. But if this is the first time you're watching me, or one of the first times you're watching, pay attention, because this is very important. There is a big difference between a market correction and a market crash. And really what we are going through right now in Silicon Valley is a market correction. Now, are there micro areas, are there areas in the valley in which the market has dropped price-wise, not median price, but actual prices have dropped fairly substantially? Yes. But are there also areas where prices have the prices have remained fairly steady even over the last 12 months, when overall active inventory has increased by about 25%? Yes. And so what I really want to drive home today is this overall, what I really want to drive home today is this overall idea that the market has neutralized, it has stabilized. All the numbers, all the data that we have implicate a stable market, yet the media feels the need to make you feel like the market is crashing. And that could not be further from the truth. And what you really need to ask yourself, what you really need to do, is dig down deep inside and ask yourself this very important question. If the market is crashing, where is the sudden surge in inventory coming from, or this certain lack of demand, or the certain decrease in demand? Right now, neither is true. I have the data to prove it. We have the most recent numbers here, the Santa Clara County statistics. Now, if you've been watching these videos for any period of time, you will know that the condo and townhome market is substantially different than it was, or than it has been for a long time. There is substantially more inventory in the market right now. However, the pendings have not dropped significantly since, July? Now, August, July, this is a very, by the way, guys, if you guys go back in time and go look at August of 2018 and then August of 2017 and then August of 2016, etc., you'll see that in June, July, August, the market slows down here in Silicon Valley. This is not front page news. It is a very seasonal market. Yes, there are areas, of course, that still perform well, but for the most part, the market slows down in June, July, August in Silicon Valley. This is not front page news. This shouldn't be front page news. And if it is front page news, get a better news source. 2019, 1423 active inventory homes in comparison to last year, 1303. Now, guys, this is not a monumental increase in homes. Now, obviously, from the condo townhome perspective, there is a fairly large increase there. I mean, there's about 250 more units to choose from. With more inventory come more options. And with more options comes longer periods of looking, of searching, because with more options come more decisions to make. Like before, if you were lucky to get a house and then there were 10 offers on a house and then you had to make the offer very quickly, you didn't have the opportunity to think. Now people have opportunity to think, and they also have the opportunity to negotiate, which is different if you're a Silicon Valley home buyer, because we've become accustomed to this idea that there's these bidding wars, and over the last 12 months there's been an adjustment period. And through this adjustment period, we have learned a lot. We've learned a lot about Silicon Valley, but I think what we've learned more than anything else is that people have really, really short-term memories, because really, this is not the norm. This is not normal for there to be 10, 15, 20 offers on a property. That is real estate. That is real estate heaven. If you're a seller, that is like that's like Manhattan in 2014, like or Silicon Valley 2017, 2018. I mean, these were history-making periods, history-making epitaphs in real estate, or in the United States, in like United States real estate history. Period. There is no debate. That was history. Do you guys get what I'm saying? It's going to make the history books. That's what I'm trying to say. And now that we have a somewhat more normal home buying experience, people think that the market is crashing. Let's not get it twisted. The market still could crash. I'm saying it could crash, but it has not crashed already. And see, there's that difference, right? And what would cause it to crash? Well, there would need to be some sort of extraneous, and I've said this before, extraneous economic occurrence that forces additional inventory to come on, or people to pull back and not make a home buying decision for a substantial period of time. There is not much real estate in Silicon Valley to begin with. And so when you factor the scarcity versus the demand, it only makes sense that this is one of the best places to park your money for the long term. People have played the real estate game here and made a lot of money. People have also lost money, but only in one at least in recent memory, only in one time. And that was due to a subprime lending crisis. The housing crisis was the causation for the economic turn. And so people equate market crash, they equate recession with housing crisis. That was only the last time. That's not how it works. See, the housing crisis caused the recession last time. It was causation. Right? Not the other way around. The recession caused the housing crisis. That's not what happens. And so this next recession, when it does happen, and like it's probably going to happen very soon, and I talked about this in the previous video, when that happens, like housing is like 9th on economists' list for why the market's going to crash. There's like 8 other reasons why the economy would crash, and then there's real estate. So the thought that the housing crisis, that the recession is going to be caused by some sort of housing crisis, is ludicrous. Now, will a trade war or some sort of like extraneous like red button, like does anything like that? And God, like I joke about that, but like please no. I don't want that to happen. But if something like that does happen, obviously it will have implications for the real estate market, and these are things that, quite frankly, you as a home buyer, a home seller, whoever you are, can't predict. And so, what you really need to ask yourself, if you're somebody that's looking to make a home buying decision today, is can I hold on to this property for the next 5 to 7 years? Am I over leveraged? If you are, don't do it. Does the flow, can I sustain this cash flow, whether it be positive or negative? A lot of people are flowing negative, even if they rent their property out. And so if you're a home buyer that's looking to buy a personal residence and you don't plan on living there for 5 to 7 years, right? Like let's say that your job takes you out of state in like 3 years and you rent the property out because it still hasn't come up in value. Can you still sustain that negative cash flow month over month and year over year until you come back up and over what you purchased the property for? Because it's a very real phenomenon, and it's a valid question. If this is something that you're not comfortable or not able to do, then it's probably not a good idea to do it, right? Like it only makes sense if the numbers pencil out and you are comfortable. There's no reason why you shouldn't do it. Interest rates are amazing. Conversely, if you're a seller, the noise is going to affect you. I already know it, because homes as emotional as home buying is, home selling is equally emotional, and so it's only human nature to read these headlines and say, my goodness, like how much more time do I have? And I don't have a crystal ball. I don't have that information for you, but all I know are the facts. All I know is that if you own a single family home here in the meat and potatoes range of somewhere between 800 to 1.3 million, you're gonna sell, if priced appropriately and marketed correctly, very fast and for a very, very good price. It may not be a record-setting price, but it's gonna come damn close. Now, if you're in the sub $800,000 range and you own a condo and 14 other units are also listed in your same condo complex, because there are some condominium complexes that have that going on right now, yeah, you might be SOL. Like you might be better off waiting. You might. Now, if you don't have any direct competition or very little direct competition and you have the best looking condo in the neighborhood, still might be a good time to sell, because God knows what the future is going to bring. Case in point, I just sold a listing in San Jose. We sold it, my team sold it, for the highest price that any condo in that complex has sold for this year in 2019, and we sold it in June. So 6 months of negative talk did not affect us, because we were still able to get my client the highest possible price for 2019. Boom. How do we do it? We priced it appropriately, we marketed it correctly, and then I negotiated the shit out of it. Pardon my language. But all in all, and by the way, if you own something above 1.3, 1.5, 1.8, just depending on which neighborhood you live in, that market, the demand for that type of home has diminished in recent years, or not in recent months rather. And the other caveat being though that, well, not caveat, but the only other thing to consider when you're selling that home, if you need to sell that home, is that you may actually get a fairly good price for your home despite all of the negative noise and all the extraneous factors. However, but it may be contingent on the sale of one of those $600,000 to $800,000 townhomes or condos or whatever. And so you might have to wait a while for them to sell their property. So you really need to gauge, if you're a seller in that upper echelon, you need to gauge the motivation of the contingent buyer to make sure that they're not just fishing for some price, and that they're willing and able to sell it for 5% less than other sales around it to sell it quickly so that they can get inside of your property. And I'm just saying 5%, but it could really be any amount. You just need to make sure that you gauge the motivation level of the buyer that's buying your property if they're contingent, because this market only treats those who are motivated well, period. Everyone else, just stay at home, honestly. Just don't do it. If you don't have any motivations, if you're just fishing, if you're just playing Go Fish, forget about it. But anyways, guys, those are my thoughts for today. Man, I'm heated. I'm heated because when I see these fake news headlines, it makes my blood boil. Because all this Brandon Cornett, who's the writer of this article, all he's trying to do is get people to click on his website. And it's just like, it's disgusting. But come at me, Brandon. Anyways, this is Danny Gould with the Gould team, selling Silicon Valley. Thank y'all for watching, and catch y'all in the next video.